Austin, should we do this thing? Should we get going?
I mean, I'm juiced. I'm ready to go.
Okay, that sounds good. All right, I'll get us started. So obviously, everybody, thanks and welcome for what I think should be an exciting topic, the KPIs that really matter. As we were planning this section, actually, Upsourced and Parallax, we decided to collaborate. And of course, you have to pick a topic. And initially, we picked a topic around utilization. And we get to the planning meeting, Austin and we both kind of show up and we've got like the same look on our face, which is like, ugh, oh my gosh, we're about to spend another hour talking about like, what is utilization and how do you calculate it? And I'm looking at the list of attendees here and I think I see a bunch of folks who have probably heard that before and may not benefit from such a deep dive on such a common topic. So as we were kind of talking about that, where the conversation did start to flow is to what kinds of conversations are coming up with our clients? Like what's top of mind with people right now? What are we all talking about? And I think it was clear unanimously, Upsourced, Parallax, we're having the exact same conversations right now, which is, first of all, 2023 sucks. Like it's tough. Things are bad, right? And not only like are we kind of the hangover of 2021, 2022, free money, demand everywhere. Now some of that like PPP, of course, has dried up and, clients have sort of pulled back and demand is harder to find. And so things have just been harder. And I think our conversations have kind of returned a little bit maybe back toward basics around, hey, what lever should I be pulling? What metrics should I be using to navigate what is a pretty turbulent environment so that we can sustain ourselves as an agency and ideally speaking, emerge the other side of this whole thing more efficient, stronger, more profitable. And so, as we're going back and forth, we're like, yeah, you know what? This is the conversation. This is what we should talk about. So that's what we're going to talk about. The KPIs that matter, the levers to pull. So welcome. We'll get into it in a second. Real quick introductions. Since I have the mic, I'll just keep talking. I'm Ryan. I'm a partner at Upsourced. I often say that we're an accounting firm for creative agencies. It's a little bit of a misnomer in that unlike most accounting firms, we don't do any compliance work. So we don't do audit and tax. We do accounting and financial strategy. So I say we sell two buckets of services. One bucket, we help organize the financial, non-financial data you need to make decisions. The other bucket is we join your leadership team. We sit side by side with you. We help you interpret that data and make those decisions. So that's what we do. We've got over 100 active marketing agency clients. We're in every state in the country effectively. We've been doing it for 11 years. And that's our why. Austin, who are you? Introduce yourself.
Who the hell am I? Yeah, my name is Austin Sheaffer. I'm from Parallax and I lead our customer success team. So my background prior to that is like, running agencies just like kind of the clients that we both serve. I've gone from, the small 30 person, we've gone all the way up to like 100 people and everything in between and the ups and downs that goes along with it. So my like long history is just in solving this very topic, like stressing about it, as the economy would take its swings up and down, trying to figure out all the different ways that I could make sense of it so that I was making the right decisions for the business. Ultimately I ended up here at Parallax, and what Parallax does is, we similarly have two focuses, which is like, we want to arm the frontline people, the people that do the work in your firm with the tools that they need ultimately to give you the information that you need in order to make the decisions you need to make about the business, right? And the second piece is that comes along with just, there's a perspective on how to do this. Like we kind of talked about that as we were getting introduced to this topic. Like there's a lot of things that everyone has opinions on how these agencies should be run. And there's all sorts of different things out there, different tools you can leverage. But a lot of it is overcomplicating the problem. And I think we share a common perspective here that like by simplifying this thing down, like by following a set of like core best practices, you can really start to unlock, the visibility that you need ultimately to make the decisions that you need to make. And that's, kind of what we're diving into today.
I'm going to say a quick thing that's a plug for you real quick, because I know you're not going to do this, but I will say a thing that we often say at Upsourced is that everybody thinks they have a software problem and they don't. They think they have a process problem. And the thing that has impressed me the most about Parallax is they attack these things from a process first focus, knowing of course that just like slapping on a piece of software isn't going to solve your problem. So I love they have a very good process focused approach to how to solve capacity planning and those sorts of things for agencies. And then they have a pretty slick tool to help you do it once you've got the right process. So pretty cool. All right. Where we go from here?
So I think, we're talking a lot about kind of, where we're headed. We, like you said at the top, like 2023 was a weird year. We're gearing up to, start 2024. So we kind of want to just kick off a little poll here, because everyone loves a webinar with a poll. But just generally, like, how are you feeling like this year compared to last year, as you're, kind of stepping forward into, we're wrapping this one up. So we just kind of want to understand generally, like, how you are all feeling here at this conversation. While that poll is being kind of generated, I think I want to kind of talk about our perspective generally on what we're seeing, and then Ryan, I'd love to hear kind of what you think as well. But
totally,
the industry we both serve is like, it's very broad, it's very complex. There are small 8-person creative boutiques that focus on a really narrow set of clientele, and then you come across all the time like 1,000-person software agencies that serve an entirely different market, and they approach the problem in a little bit of a different way. Like, we've noticed that like that uncertainty is kind of like showing up across the entire spectrum, right? It's just hitting companies a little bit different depending on where you're at within it. Those, as you get towards that like smaller end of the spectrum, I think those are the firms that are struggling the most. They're seeing much more reduction in staff. There's less confidence in their overall long-term viability. And I think ultimately you're kind of seeing a lot more bottom line like volatility in those firms. Sounds like a lot of people right now, our results coming in on this poll, that a lot of people are kind of, a vast majority, 68% of you are kind of hanging in there, taking the punches, just kind of like absorbing blows and looking for your opportunity to kind of strike back. And I think that I'm going to come across pretty biased here, I think, just in general because of my role here at Parallax and what we do. But like, I think the answer to why there's a lot of disparity between like why these smaller firms are taking more punches than some of these larger firms comes down to the way that they mature their operations, and they stop kind of reacting to what's happening to them. Like, at this point, like, I love the way that poll was answered, is like, why are we taking punches? Like, why are we letting somebody hit us? Like, why are we not turning around and like, why are we not hitting back? Like, why are we not trying to take control and manage the situation that's in front of us is generally our take and approach to the market.
Yeah, totally. Yeah, I mean, I'll share a little bit of what we're seeing. I mean, but I will mirror, in general, like, agree. It's been uniformly, demand has hit everybody fairly uniformly, with a few exceptions. Demand is lower, flat out. But there definitely are, maybe I shouldn't say this so dramatically, but winners and losers. There are some that are sustaining and thriving, and others that aren't. And there are some commonalities. I'll talk a little bit more about them, but I agree with you. I think the smaller agencies are struggling, certainly to a larger extent than the larger agencies, in part because of the things you said. Like, the larger agencies have figured some things out. They have more mature operations. That is what has enabled them to get there. Also, there are some elements of, like, when you're a smaller agency, you have some go to zero risk, right? Like, when you're a 35 or 45 person agency, you can go down to a 25 person agency. But when you're a 7-person agency, well, this is about as small as it's going to get. You know what I mean? Like, there's not a lot of opportunity here. Like, we're at some point, it's like, well, we're done, or we're freelancers, right? So, and there's less cash reserves and things like that. So, but I agree with you. Like, it is not. But we also have some small agencies who are thriving, and some large agencies who are struggling. So, a support to some of what you're saying is not just size. There is some maturity of operations. Well, let me tell you a little bit. I actually have some slides occasionally, but I won't spend too much time on them. But I'll share a little bit about what we're seeing overall. Again, yes, it's been tough. We're definitely seeing headcount reductions kind of across the board. And in fact, so many that we did take, like, we put a little effort into doing some research. Like, we benchmark our data often here at Upsource. We've got a lot of data points. And so we took some effort to say, hey, can we like, we're getting a lot of like, hey, things are bad. Are things getting better? Where is everything? Like, can we use our data to try to answer that question in somewhat of a scientific way? And so I'm going to share my screen real quickly. And I can share some of what we are seeing. Okay. Do you see this, Austin? Do you see the slides here?
I do.
Okay, cool. Awesome. So a couple things, by the way, when we get into the KPIs, one of the things that I'm going to get on my soapbox about is the idea that when people love to look at KPIs, they love to look at like, here's 8 KPIs and you should look at all of them. And one of my complaints by sort of this idea of all KPIs are equal is it ignores the concept that metrics are often related to one another. They have a direct relationship to one another. And one of the things that we were able to show as we were looking at the data is we could use the relationship of metrics to one another to show how hardship works its way through an organization and how it manifests. So for instance, we're seeing a lot of headcount reductions, but we know that's a lagging indicator. Like that's the last straw. That's the last thing an agency owner wants to do after they've tried every other option. And so we started to say, hey, what are the leading indicators? Like, how does this actually look? So just super quickly, the leading most indicator for an agency would be their pipeline, right? Like opportunities. Am I getting new meetings? Am I getting proposals? Am I getting, contracts won? Those sorts of things. That's the first thing when that starts to happen. And as that dries up, as your pipeline dries up, obviously I'm then sending less invoices and I'm doing less work. And therefore I'm earning less revenue. And as revenue declines, but everything else stays the same, my profit declined. My gross margin goes down. My operating profit goes down. And as my operating profit goes down over a couple of months, let's say it was like 20%, and then the next month it's like 10%, and then the next month it's negative. Now that my profit is now negative and I'm burning cash, I start to eat into my cash reserves, right? And we of course like to talk about, having 3 months of operating expenses as cash reserves. And so as I start to eat into my cash reserve, I start to see a loss of liquidity, like money I have available to pay for things. And so as I start to eat into my cash reserves through continued months of running an operating loss, my 3 months goes to 2.5 months, and that goes to 2 months. And now I'm sitting here with less reserves than I prefer. And I'm looking out at the horizon to say, are things dramatically improving or not? And if the answer is no, then I have to take the fourth and final step, which is I have to reduce headcount, right? And so this is kind of the relationship of all these metrics kind of plotted over time. And so just quickly, hey, let me just show you like what these metrics are how these metrics are appearing in our portfolio of clients, just so you can get a sense for what's happening. So the headcount reduction, the most dramatic, obvious thing. And by the way, we ran this analysis at the end of the second quarter. I don't have this for the third quarter yet, but by the end of the second quarter, we're showing headcount reductions continuing to increase. So the most rifts that we've seen among our portfolio happen in the second quarter. So we look at that and we think, well, that's not great, but we don't know if that's getting better, it's getting worse, staying the same, not sure. So we have to step a metric back, right? So if we step a metric back, we look at liquidity, right? The cash reserves that help us avoid or force us to make a headcount reduction. And so what we see is that our cash reserves or our liquidity was declined the most in the first quarter of this year, but leveled off in the second quarter. Didn't get worse in the second quarter. So that's a somewhat optimistic sign, right? Improve maybe ever so slightly. So then if we were to move one metric back, we look at profitability, right? What is contributing to this liquidity of this working capital? And so when we look at profitability, we see that the greatest decline in profitability was in the fourth quarter of last year and a little bit of the first quarter. But from that point forward, we saw some very slight improvement. It certainly wasn't a runaway. It's not a hockey stick, but it is getting better ever so slightly. And by the way, we plotted gross margin and utilization. Utilization, of course, is one key input to gross margin, and it's kind of showing the same trend. And so then we stepped one metric back to look at pipeline, the leading most indicator. Unfortunately, we don't have line of sight to the CRMs for all of our clients. So we did a survey to say, hey, how are you feeling about your pipeline relative to the start of the year? Better, worse, same. And what we saw was over half of our clients are feeling better. About a third of our clients are feeling the same. And the minority are feeling worse. Not all that dissimilar, by the way, to the poll that we asked today. Similar kind of results, right? And so I think if I stop sharing here for a second, what we took away from that is, yes, things are bad. No, they are not symmetric across the portfolio. And as best we can tell, things don't appear to be continuing to get worse, but we don't yet know if they're getting better. So anyway, that's kind of what we're seeing. one of the things that I wanted us to talk about, and we hit on this a little bit already, Austin, but like, okay, what is mostly true? So maybe we take a step deeper into the conversation we started to have, which is what's true about the agencies that are doing well and the ones that are not doing well, right? And I can share. Like I said, I think I think, as I mentioned, like there's definitely a cohort of agencies that are just susceptible because they're small, right? They haven't generated enough lifetime profit to have the 3 months of working capital. And so, again, I'll often say the game of an agency is matching supply and demand. Like that's your whole job, right? And in a project-based business, demand peaks and valleys all the time, which means when a peak happens in demand, you have to be ready to hire fast. And when a trough in demand happens, you have to be ready to lighten up your team. And that's the game we signed up for. It's a feature, not a bug, of running an agency. And so the smaller you are, the harder it is to match supply and demand, because there is a point at which demand is so low that it's very difficult to find the right supply to service it without kind of going out of business. And I think some of our smaller agencies felt that way. I think the other common thing that we saw is, I would describe 2023 as the year to probably play a little more defense than offense. So probably not the year to get really aggressive, taking out lines of credit to either fund working capital or to make massive speculative investments, right? It's not the environment to continue to, again, in the COVID era, we had these really cheap loan programs and felt like we didn't have a lot of opportunity or alternatives. And so we saw folks take advantage of those debt instruments, but those were long-term. And while maybe there's some pros and cons to having done it, getting the EIDL over however long, not that big of a deal, but some of those habits stuck. And we saw folks getting into higher interest rate, like cabbage loans or other high interest AR based loans that created a larger hole to dig out of. And this is just not the year for that, right? This is not the year for excess profit to dig yourself out of a hole. This is the year for like steady state. And I think the agencies that were more disciplined and knew, they read the field and said, we're going to play defense right now. That doesn't mean we're not going to grow. It doesn't mean that we're not going to sell. It just means we know demand's going to be a little bit lower. And so what we're going to try to do is not erode our profit or our cash reserves and not be incredibly speculative. And we're going to try to stay in the game. And if that means we have to, engage in some headcount reductions, then that's what we're going to have to do. The last thing I'll say, and then Austin, you chime in, is speed of decision-making, I think, is a very common, a common through line. So a thing we often get the question of like, hey, should we consider a headcount reduction or consider a cost reduction? Is it too soon or whatever? And the thing I'll often say is, I have literally never, and I mean this in sincerity, I've never had a client regret making a decision too soon. Never. But boy, oh boy, do I have a lot of conversations with people who regret waiting too long, because you just can't put it back in the box. The cash is gone, right? Like your reserves are gone. And so you can always go back and hire if you were too fast, but you can't just go and like catch a bunch of cash that's sitting on the ground if you spent it. So speed of decision making, I think. Anyway, Austin, what you hit on a couple of those things. What else?
Yeah, I like that. I mean, that last point is one of my ultimate favorites, and it's like, I didn't even realize that this was originally attributed to Colin Powell of all people, which is kind of weird. But like his point that like, don't make decisions with less than 40% of the information, but don't wait to make a decision with more than 70%, right? Like I love
that.
That's central to our philosophy in general at Parallax. It's just like this, this game of chasing precision instead of accuracy, when like, no, you're going to make the same decision at 70% that you would make at 80%, at 90%, at 99% fidelity. Like you have to act quick. Like if I've learned anything in my past agency life, it's exactly what you described. Like those are the same mistakes I used to make all the time. There was a point I was going to make. Oh, like I don't know if you feel like pulling it back up, but like that, your little 4 steps of like starts at the pipeline. Like I think that aligns with, again, just the way that we approach this problem, and what we've learned over time is that like, those you talked about the game we're in. Like we've all signed up to play this like roller coaster, like, hey, supply and demand is going to go up and down, and it's your job to kind of be ready for it and react to it. And like hey, guess what? Like if you thought it was going to be any different, like you're in for a, a bit of a surprise. But like we approach this though saying like I think a big part of that volatility is lack of foresight, right? Like we're not spending enough energy looking forward at what could be and reacting to it. Like obviously then you make decisions too late, and you usually do it when you've already lost all your cash. You're making those
Totally.
decisions, when you're going to lay people off or whatever before, and you're not going to gain anything from it. Like this loss of pipeline is something that like it's not entirely out of your control necessarily, right? Like it
Yeah.
obviously, responds to the whims of the market, and things like that. But one thing Tom, our CEO, says all the time, and I absolutely love it, is like one of the virtues that these businesses have, like professional services businesses have, that a lot of other industries don't, is this idea that like when we go to market, like when we go and want to we're going to go propose a new opportunity with a new client, we get to wholly reinvent ourselves.
Totally.
Right, like we get to completely change the way that we present ourselves, how we talk about what we do. What are you get to evolve your services, but you can't really do that unless you have matured your operations to such a degree that you're spending, you should be spending exponentially more time, in our opinion, on that go-to-market strategy, on that messaging, than you are in like fine-tuning operations. Because when you're fine-tuning operations, you're down here in these bottom three
Yep.
rungs where you're dealing with something that's already happened to you, and you're not getting ahead of it. And that's like what overall the firms across our portfolio that are doing the best, like, yeah, you're still seeing some pipeline stress, right? Like it's not
Yep.
as full as it once was, but you gotta, like, I think a lot about, we're talking a lot about the companies that you and I serve together.
Yep.
But often, like, if you think one step further and you think about their buyer, the people who are buying from the people on this call,
Yep.
uh, those people are doing the same thing, right? Like those firms are holding cash, they're making sure that they're not
Exactly.
spending or whatever, and we're getting the downstream impacts of that. But they're not spending it. They're just spending it more wisely. They're spending it with firms that have a more confident approach. They're spending it with firms that more tightly align with their value proposition. So the opportunity is there. But if we continue to, the firms that don't evolve in that sense, and like I agree with you, like taking risky bets and like,
Yeah.
hey, we're going to make this huge capital investment into this other, ancillary service offering, isn't necessarily the correct move.
Yeah.
Uh, but you can definitely take the time to reinvent how you go to market and spend way less time
Totally
on.
agreed. Yeah. Well, this is the classic, like, and then we can move it forward, but like the classic important but not urgent, right? Like I feel like the folks that struggle are firefighters, right? They move from one fire to the next fire, and it's this project went sideways, that project went sideways, and it's this, we often get ourselves in, we host these project profit reviews where we look from project to project. We know that the punchline was we didn't earn enough gross margin, and the reason is because we had this, it was because our projects didn't earn enough margin, and the reasons are a myriad of reasons. And yes, we have to diagnose those reasons and solve those, but the agencies that are just solving idiosyncratic solutions are just always going to be solving idiosyncratic. Like it's just hit is whack-a-mole, right? We have to do that, but also we have to save space for lifting our head and saying, hey, what's happening on the front end of this? What's going on with regard to how we're positioning ourselves and how we're scoping ourselves and who we're bringing into these conversations and how we're triaging that kind of stuff. So I'm totally with you. It's a maturity with which you do those things that have this downstream impact. So I think that's great. So we talked a lot about like what what ultimately is manifesting itself and what are the common links between agencies that are doing well and not doing well. And I think in general, I think we are kind of coalescing on this idea of maturity of operations, maturity of approach, thoughtfulness. And so I think that begs maybe the question, maybe central to the title of this whole thing, which is, okay, so what should people be looking at, right? And so let's start having that conversation and talk about what are the metrics that you should be kind of evaluating. I'll start with maybe a financial approach. And of course, realizing that it always, we're always going to end up in an operational area, right? The finance is the tip of the spear. It's how we diagnose the problem, how we solve the problem lives with operations, right? And so that's kind of how we'll finish. But relative to what you should be looking at in terms of metrics, I'll flash another slide here. But before I do that, my preamble, I kind of already got on the soapbox. I'm gonna step right back on it because I could live up here. This our thinking about how you should evaluate metrics is really in response to how the world often handles these things. And even some of the people I respect the most in the agency space also publish things like, hey, here's your financial dashboard, the 8 KPIs, and you should just print this list off and hand it to your controller. It's like, that really ignores two fundamental truths about these. And I've said these before, one of which is these are related to one another, right? Very few of these KPIs live in this vacuum, right? And so thinking about them as if they live in the vacuum doesn't help, right? So they're related. And so some of them have higher leverage opportunities. If three of them, if by solving one, you solve three, why wouldn't we just worry about the one, right? The other is it ignores where you are, you, the agency owner, in your life cycle. They're probably all not equally important to you, right? So for instance, let me show you how we think about this. And this is in a hierarchy, right? We have created this hierarchy of financial needs. It is the framework is stolen from Maslow's hierarchy of needs, right? And so just like in Maslow's hierarchy of needs, you cannot worry about self-actualization before you have shelter. If you're an agency owner, you can't worry about like creating a predictable revenue growth mechanism before you have solvency, right? Like if you can't make payroll next year or next month, rather, if you can't make payroll next week, then it doesn't make any sense to get into the CRM and start knocking around with opportunities. Like, no, we need cash now. We're not going to be able to take that opportunity and close it and sell it and service it and invoice it and collect it. And then like, no way. We need to figure out like, where are we going to get cash tomorrow? And so organizing these things in a hierarchy helps us focus on the one thing that matters for your agency in that moment, because we firmly believe there's probably just one thing, because again, these KPIs have relationships with one another. So when you solve one, you solve others. And because we can't focus on 8 different things as a business owner, and we need to create momentum. So anyway, I'll briefly introduce how we think about these metrics, and then we can dive into a couple of them. So at the base is solvency, as I mentioned, right? Can I make payroll next week? If not, that's all we focus on. If we've moved past that stage, the next is gross margin, right? And we'll talk a lot about gross margin in the back half hour of this. Gross margin is how much profit am I making on the core service of the business that I'm doing, right? Ignoring overhead and other operating expenses. Gross margin. And this, by the way, this is the game. This is the agency. If you can do gross margin well, you can do everything else well, right? The rest is just time and discipline. Gross margin is the business. Once I've gotten gross margin to a place where it makes sense, and I can throw out benchmarks, but the reality is like they're it's very dangerous to try to throw out benchmarks for agencies. They're all very different. 50-55%, a lot of like project-based design agencies kind of shoot for, but either way, gross margin. And then once I'm there, the business is like unit economically positive. I'm focused on cash reserves, right? As we mentioned, the game is matching supply and demand. You're going to have highs and lows, and you need cash in the bank in order to sustain the normal high and low of project-based cash flow. And we like to recommend 3 months, depending on your business, maybe 4 months. Once we've gotten cash reserves, now we're really focused on net operating profit. So, just net profit after paying for owner salaries. Is that enough to make distributions, to be sellable, in order to invest in other initiatives, those sorts of things? And then the fifth and final one is what we call predictable revenue growth, or having some sort of like sales and marketing mechanism so that you're generating revenue beyond just word of mouth and referrals, right? There's some intentionality to it, and we can do some amount of prediction for it, right? A lot of what we'll talk about later with regard to forward-looking utilization relies on us having some kind of visibility into what our pipeline looks like, and that is critical in order to sort of emerge from this stage. So that's overall how we think about metrics. Austin, how does that compare? I know, again, obviously this is very financial in nature and you're a little downstream from that, but curious like how that compares to how you think about it or how you see it work at clients.
Well, I just want to start by saying you make it sound so easy. You know what I
Well,
mean?
you just climb this step and then you climb that step. And then, it's just like lifting your leg and
And you're there. That's
you're there, it's exactly. No, it's,
uh,
this is the business.
no, I completely agree with you. We take less, I mean, that's why I like the pairing that we have here is that like, you're tying it a lot tighter to just like really, what is it? Cream, man, cash rules everything, right? Like you're tying it a lot tighter to the thing that like the reality of it. And I feel like sometimes the metrics people pull, like the KPIs, you can kind of get drunk on them a little bit, right? Like they're
Yeah.
fun to put together. They're like if you're a nerd like me, like I would just spend so much time back in my day, like coming up with not inventing new metrics, but just like constantly out searching for different things that I could bring together when really should have been focusing on was just like make it simple, focus on the stuff like and focus on the relationship between just a couple key ones because you can learn pretty much everything you need to know about any business just by looking at really like two or three different things and how they relate to each other, which we're going to talk about here in a minute. But like I used to do it all the time. I think I would it wasn't until like years after like years of doing this where I'd like go on a webinar or I go Google around and I'd find some new ratio or thing like that to apply to my business that it was like what I realized too late was that what I really was just chasing was like confidence, right? I just was looking for
Totally.
something to just validate what I was feeling. Like I see this, am I right or am I
Yeah.
missing something? And I think that's a
Totally.
big why we end up with 8 different,
Well,
and yeah.
it's so funny though because and you even made a joke about it like after as I was saying like oh you just make it seem so easy or whatever, and I think I'm totally with you. Like I think there is this, especially for first time agency owners, there's this belief that like business is hard. So like how we think about it must be complicated. It must be hard. There must be more than this. We as humans love like magic pills or silver bullets. Like we want a playbook and we don't like simple answers. We like complicated answers because it feels assuring. Right. And so it's so funny you say that because I'm thinking back to a sales conversation we had last week. And it's like, I think we're probably okay, but I just don't know. Like, I don't know what I don't know. It's just like, I need somebody to help me tell me, like, are we doing okay? Like, it just feels like darts on a dartboard. And I think that's like a pretty common emotion. And I think for that reason, there's this belief that like, because I feel this way, it must just be complicated. There must just be all this information that we don't have. I just need to get it. And that's the answer.
I think you and I probably have a very common thread between a lot of the customers that we serve in that everyone's kind of everyone's chasing validation, right? Everyone wants to know that the way they're interpreting it is accurate, right? Like nobody goes to
Yeah,
agency school, right? Like nobody's teaching us this stuff. And so it's like,
totally.
but like trust yourself, dude. Trust yourself. Like
I
you probably get it. And
You
you're
got it. It's the,
yeah.
you know how to do the thing that is hard, which is how to move pixels around or how to create like fresh. The hard thing. The rest of it's easy. Trust me. It's not complicated. It's not rocket science. Hey, real quick before we go, a couple of quick questions. I'll hit those real fast. One was, can you explain the difference between gross margin and net profit, which I would be happy to do. By the way, yeah, and the other like. Are they both? How much am I making after expenses? Is one a percent? One is a dollar amount? Great question, actually, because I actually am kind of mixing terms so first of all, there's gross profit and net profit. Gross profit is revenue less cost of sales. Cost of sales are the cost it takes to service the revenue you generated. Generally speaking, in an agency, that's your people, that's your service salaries and any other out-of-pocket costs like media or printing or whatever else. What is the direct cost to service that engagement? That's your gross margin. And again, we'll talk more about that in a second. Or that's your gross profit in dollars. Gross profit in dollars is that. When I say margin, I mean the percent. When I say profit, I mean the dollars. So those are the two differences there. So gross margin would be gross profit divided by revenue, and that's a percentage. Net profit is your gross profit minus let's just call it overhead, sales, general, and administrative expenses. So things that are not directly related to servicing the engagement, but rent and your sales team and office expenses and whatever else. I'm interested. So the next question was, hey, I'm really big for a believer in these KPIs, but what's your take on how to share some of these out? For instance, sharing financial hardship can be good from a transparency perspective, but like also maybe it's negative. Any recommendations on like this idea of transparency? And I suspect you have some thoughts on this too, Austin, both at Parallax and also in your life in an agency. What's your take on transparency and how far to go?
Man, I have always just kind of been like, I don't know, maybe I'm getting too philosophical here, but like the role of the company plays, right, is like it is a collection of people all kind of working together towards the same goal. And if you don't have everyone on the same page with what needs to be done, then your odds of actually getting there are pretty low. But there's obviously like sharing, just being transparent on its surface doesn't really accomplish anything if it's not tied to, but here's what we're going to do about it, right? Like
here are the inputs, here are the levers.
Exactly.
Yeah.
I want to empower the people on the front lines. Like the people doing the work know the most about what's going on in the business, and you need to democratize out and arm them with the ability to kind of remove hurdles for them to tell you what's actually going on. That's why, when people talk about utilization, like I hate when we use it as like a punitive thing, and like time tracking is this like it's turned into a grind and a chore. And it's like, no, this is like one of your best tools at understanding how your business is actually running, and you're kind of cutting your legs off before you even get a chance to go.
I totally agree. By the way, you used a term tool relative to utilization that I'm going to come back to because it's a really good term. But before I do that, I just want to agree with you, which is I want to say another thing, which is I think business owners often are smarter than they give themselves credit for. Your employees are too. Right. They know. Like there's just, I don't know, what do you think you're hiding them from? Like everybody knows, and no good can come from being like overly secretive. Like I might be I'm definitely on a poll. I'm of the poll of just kind of radical transparency. Like I by the way, I ran an agency before Upsourced. And when I ran the agency, we just tell everyone, and by the way, we had to go through several rounds of layoff, and we had to pivot to a new area of business, and it was tough. And we were like, here's how much money is in our bank. Here's when we run out of it. And here's when we think we can, be break even again or whatever. And I feel like we got so much more buy-in and loyalty, and they knew anyway. So it was like, let's just enroll them in the solution, as you said. And rather than like pretend like we're saving them from something they can't handle. So anyway, I say go all in, but every culture is different. So take that and apply it how it makes sense for you.
Need the perspective, right? Like if I always only have eight weeks of cash, explain to them why seeing 8 weeks of cash is not a bad thing.
Not a bad thing. Exactly. Totally. Yeah. Okay. So let me go to, I'm going to move into, a different topic. So relative to KPIs, I mentioned that, they're one of the fallacies of the KPI dashboard of 8 or 12 or 50 or whatever is that they ignore what is right for you in this moment. The other is they ignore the relationships among them. So, and they strip the KPIs from serving their purpose, which you crystallized perfectly when you called it a tool. They're tools. This isn't a report card. It's not a scoreboard. It's not a thing we look at. It's a thing we use. They're tools. So let me show you what I'm talking about, right? So we have this, so backing up, gross profit, and which is the dollars, and gross margin, which is the percent. As I mentioned before, this is the business. Like this is my business doing well or not, right? Obviously, net profit is what is in your pocket as an agency owner. But if you have good gross margin, then there is no excuse not to have good net margin. Like that's just time and discipline. It's just having a reasonable budget and not spending on frivolous things. So if you have good gross margin, you can have good net margin. And so this is the game. When we go to an agency and we see that there is a gross margin problem, which by the way is because this is the whole game, this is where we spend most of our time. We know that there's one of two problems, right? We know that either there is a utilization problem i.e., you got service people doing work, or you have service people who are meant to do work and there's not enough work for them to do, right? They have capacity. They're sitting on the bench, right? You have excess utilization. So either I have a utilization problem or I have a rate per hour problem. In other words, my people are doing work. They're utilized. I'm just not realizing enough relative to my cost rate to make money, right? And again, it's usually not, by the way, I'm pricing low. Like I usually start out with the best of intentions, but through scope creep or a variety of other reasons, my realized rate per hour is negative. But the point is, these are related to one another. In one way you can think about it, again, if your job is like supply and demand, right? As Austin said, we have fewer tools to solve the demand problem than we do the supply problem. Some of the demand problem is the market and others is our positioning. And rate per hour is one of our demand tools. So rate per hour is kind of like a demand tool. And utilization is kind of like a supply. That is a supply tool, right? So now that I know what my demand is, utilization is is the tool I use to match my supply to my demand. In other words, if utilization is too high, meaning my people are all fully booked, then I'm not going to be very flexible to take on new work. But if utilization is too low, I have too much supply of people relative to the demand for my people. And therefore, I need to make an adjustment in the way of likely reducing my people in order to get utilization more right size. So, but there's a relationship. And again, just to sort of hammer this point home, if I come into a client and I see that their gross margin is bad, and I see that the rate per hour is good, I know what it is. I know exactly what it is. It's utilization. There just aren't any other real options, right? And so this relationship among these things is really important. And again, a thing that and I'll hand this over to Austin here in a second, but a thing that I want to like hammer on, which is, again, one of the things that we often see is I use my KPI dashboard just as that. It's a dashboard. It makes me feel good or it makes me feel bad. It's not meant to make you feel good or bad. It's meant to inform what you should do, right? And so when I see utilization doesn't look good, that's not just a bad feeling. That's what am I going to do about that, right? And I know this is, I suspect this resonates with you, Austin. And I know we've shared stories a lot where you've, whether it's these or others, where you're able to step in and you see like a couple of KPIs and you realize, I know the relation. I know what's around the corner. I know how they're doing because these are all interrelated.
Yeah. I mean, I love that thing has been one of the most helpful relationships that like I wish somebody had taught me, 8 years ago. Because it really does. It helps you figure out exactly where you have, like, where you need to focus your time. Like, oftentimes we run into a lot of companies coming to us. Everyone's always looking for help, right? Like, no one's buying one of our services because they don't feel like they have something that they need to improve, or like they,
totally. Same.
Right. So, we'll take the things that I love about it is like we have, like, each one of those can then even be kind of like almost unpacked a little bit in even more detail. Like with gross margin as a good example, like we break it down into like, well, let's like take that analysis and let's apply it to each one of your projects, right? Let's look across like, are each of your projects contributing to gross margin in an effective way, right? Like and it goes into like the way that we try to arm our project managers and our frontline people. It goes into transparency, which is like give people the margin, like let people understand like how the project itself is performing. We see a lot of people who want to like hide that stuff and put it away. I don't want people to figure out cost rates. I don't want people to reverse engineer anything. And it's like, well, you've got to give them the tool that they need in order to do the job you need them to do, which is make sure each project is profitable. If each project is profitable, you have enough projects, your gross margin is going to ultimately be fine, and the business has a higher likelihood of being profitable at the end of the day.
1,000%. In fact, that exact problem / opportunity, like, we love to talk in frameworks here. So we talk about like life cycle of agencies, and we have client, the build mode is agencies from like 1 to 3 million. Grow mode is from 3 to 5 million or 3 to 8 million. And we often say like the number one opportunity / problem of newly minted grow mode agencies who kind of in that 3 to million area is that they haven't figured out how to effectively provide that information, like the margin for the projects and the levers that are at the disposal of those individuals, and find a way to hold the owners of those accountable, incentivize them, and create a feedback loop for us all to ask, again, not punitive or positive, but just, okay, it's here. What do we want to try differently? What do we need to do differently? Okay, great. Let's talk again in a month. Did it work? Do we need to try something different? Like, but that mechanism, that's the game. And you're totally right.
There's a good little question here in the chat, which is like, any tips on handling issues where gross margin on a lot of projects tends to look good until the last 10% of the project. This is why Parallax exists, is like to help try and solve this problem, is like, but it's in the way that you ask your team to, at least our perspective, is the way you arm your team with giving out that signal, right? Like, we often see a lot of people plan projects based on maybe what was originally scoped or what was originally sold, and you're not making adjustments to those projects based on what's actually happening. Like, give me the reality of the situation. And that's cultural sometimes. Like, it can come down to people don't want to show that, or they're not thinking that far ahead. Like, it's really easy to find yourself in a situation where you're kind of like, planning your projects week to week to week, because that's what you got to do next. That's what I can see 2 sprints out, so I'm going to plan 2 sprints out. But what we want to make sure people are thinking about is like, well, what has to be delivered. What you signed yourself up for. Are you planning this thing out? I know it's a guess. It's like a hurricane map, right? Like, totally. The probability of where this thing might end up, like whether it's going to, land in Miami or New York, it's like, totally. You never really know, but you dial it in the more and more
as we get closer. Yeah, exactly.
Get closer, you make those forecasts, and you can get ahead of those problems.
The hurricane map's such a great analogy. Yeah, I mean, that's great. I love that. I had a similar attitude, which is like, I bet that these projects are off the rails earlier than the last 10%, right? It's just that we just kind of turned on the Weather Channel, at 3 p.m. the day it was supposed to hit, and we're like, oh shit, it's here, right? And so, yeah, I think you're totally right. So one thing I want to just kind of peeking at the clock and maybe giving some room for other folks to jump in at Q&A. Another like in a similar vein, we talked about how we can use these tools we can use these metrics as tools, right? I can use utilization to help to drive the business, and not just as like a thing. But a guiding philosophy I know that you adhere to and the software enables is, well, it doesn't necessarily do us a ton of good to only look at utilization like today, right? It doesn't do us any good if we go back to that hardship map. It doesn't do us a ton of good to say, well, I'm now down from 3 months to 1.5 months of cash reserves. What's going on? Oh, shoot. My team's underutilized. Oh, shoot. I should probably let some folks go. Like, that's probably not the time to do it. I should probably try to use this in a more forward-looking way. What does that look like? How would an agency try to forecast utilization, for instance? Like, what are the inputs? What's the feedback loop? How does it work?
Yeah, I think you need generally 2 things. And that question that came through the chat is like really related to the first one, which is like, you need to have confidence. I'll say it that way. You need to have confidence that where your team's current demand is allocated, right? Like, how is my team? But you have to look out. There's nothing you can do about yesterday, right? The past has already happened.
Yep.
The script is already written. Like, let's just make sure that, we look as far out as we're comfortable. And the comfortability in that is going to differ from agency to agency, because different agencies have different sales cycles, right? Like, at my old firm, it took us about a good 3 months to properly close deals. So we wanted to make sure that like we had reasonable certainty within the next like 8 to 12 weeks where capacity and demand were aligned, right? Just from the stuff we've already sold, those are the things we know the most about. Your team, again, you're empowering your frontline staff to tell you what's going on. Like, if you're putting roadblocks in place to that, if you're adding punitive culture to it, you're always going to be working with incomplete and inaccurate data. Not precise data. Again, we're taking broad strokes. With that, you understand at least where you're headed. You can see where it drops off. We're all in project-based businesses, right? Like, projects end, teams roll off, relationships they just kind of wind down. Like you're always going to see that sort of like slant down into the future where eventually demand is at zero. So the second thing you need is like, this is also central to our philosophy and why the software is built the way it's built, is that you apply that same level of, projection to the stuff in your pipeline.
Yep.
And you can lay all that stuff together to at least like within a reasonable confidence. Again, 70% fidelity, right? Let's listen to
Yeah.
our
Yeah.
owl, right? Laying that on top, you can get a sense of at least where demand is headed, and you can start to make decisions before it becomes too late. Go all the way back to where you started this conversation, where like oftentimes the people we're working with are making financial decisions and making headcount decisions by the time it's too late. And you can leverage utilization as a confidence tool to at least just understand at least what exists in the realm of possibility here, so that I'm not making decisions that, for realities that just couldn't possibly manifest.
Well, here's a question that's like maybe a little more tactical than it is theoretical, but it's a problem that I obviously face as a service provider, and I assume you face it too. And you've hit on this idea of like precision versus accuracy. In order to do this like the best, right? In order to do what you're describing the best, a few things would be true. One thing would be like, we have a really good time tracking mechanism. Everybody maintains 100% compliance. They track it daily. They use the timer in Harvest or whatever it is, right? Really high fidelity. Also, I have a really well-groomed CRM, which is, I'm whatever it is, HubSpot, whatever. And I've got all my, line of, et cetera. You get what I'm saying? And there's probably other data sources as well. And I maintain those really well. And I feel like a lot of folks struggle with having like perfect application or adoption of those things. And sometimes they'll kind of do like halfways, right? Like, well, I don't have a great CRM, but I have a Google sheet of these things and it tells me like at least what I send out in proposal. And anyway, my question to you would be like, is there in the world of like gathering the data in order to forecast these things and make these decisions, is there a spectrum of outcomes that are acceptable for a team to set up, or a spectrum of processes? Or is it like, we're doing this whole ass or we're not doing it at all? Like, what's the attitude? Yeah.
I think we're aiming for like medium ass on this, because like,
okay, good medium ass.
Even hearing what you're saying right now, I'm like, why are you using timers? Like stuff like that to me,
Totally. Yeah.
you're making it harder to actually do it. You're only capturing the time that people are spending in that exact window that they're working on that opportunity, rather than all the time that went into it, both like before and after, like the mental energy, we are providing a very valuable service in this industry, and we should be charging our clients accordingly, right?
Yep.
With pipeline's another example. Like, I don't want to keep plugging the software necessarily, but like, we take like a, the productized services approach, right? Like when you go to market and you engage with a client, you generally do things similarly, right? Like you're not always like, certainly every client is coming to you with bespoke problems. Like it's not always the exact same, but when you're selling your approach, and you're not necessarily just going in and selling features and things like that, when you're selling your approach, it becomes really easy for you to take a general approach and apply it to what exists in your pipeline. And now you have infinitely more visibility into where things could go, which roles are going to be in demand. Like we used to suffer from this all the time. We're like, we built software. My design staff would always be like full on 40 hours a week busy for the first 8 weeks of a project. And then they would have nothing to do
exactly
while the product was being built. And those are like the little L Tetris pieces. And those are really hard to fit together.
Yeah, totally.
But you need to understand, like, I can at least take that L shape and I can apply it to a project in the pipeline and get a better sense of like where my demand is going to be and start to fit those things together, because I'm making it easy. I'm not chasing perfection. I'm not using it like the timer in the timesheet analogy for the CRM. Make it easy, remove barriers.
I love it. Awesome. Well, so I'm just glancing at the time. I know we're about at time. And so let me do a quick pitch. If anybody has any Q&A they want us to attack, happy to do that. While in the meantime, Austin, any places we would direct the folks on the call in order to, like, they're like, hey, I like this Austin guy. I like what they have to say. I'd love to learn more. I'd love to check out Parallax, whatever. Like, where are you sending folks?
I guess that would be going to our website. I hadn't really thought about how I would actually physically plug what we
Yeah,
do.
sorry. Well, here we are. The website's good. Yep. Getparallax.com. Good. Yep. I can also say Parallax puts out a ton of really good content. So certainly check that out as well. For Upsourced, you can obviously go to our website, upsourcedaccounting.com. You could email me, rwatson@upsourcedaccounting.com. We have a YouTube channel. We put out videos like this at Upsourced on YouTube. I think that's here real quick. I've got one more here. I believe I've got a couple more. So quick Q&A. Feel free to hang around for this. Majority of revenue, ongoing services, but we've shifted to project-based and SEO work with new brands over Q3. How are you coaching agencies to work beyond referrals and word of mouth for their new business pipeline? We're using HubSpot for nurture and leaning more into inbound marketing and Zoom Info. Anything you're hearing that's working well. So like what's working well outside of SEO outside of like word of mouth and I'll take this real quickly. Feel free to jump in, Austin. I know you can from either experience. Just in general, I would say lots of things can work well. Like my attitude is always like, so when we, I'll tell a quick story, which is like we come in as experts and we look at gross margin or we look at the P&L and we say, okay, you need either like, and it's a lot like weight loss, like, oh, okay, this business needs some exercise or some diet. And exercise is like revenue and demand is like supply, right? Or I'm sorry, diet is like the supply and revenue is like the demand, right? Or exercise is like the demand. Anyway, point is, if you've decided like I need more demand, which is like exercise, you have all kinds of options. I can go biking, I can go swimming, I can go to the gym and lift. And the reality is like they all can work. Like they all can work. What probably doesn't work is like trying biking for like a week and realizing I didn't get a lot out of this. So I'm going to maybe go take a run and then like pulling a muscle and realizing running's not for me. And so then I'm going to go do in general, like there's a few things that I've seen that doesn't work great. Like I haven't seen a lot of success with social ads for like an undifferentiated offering. And so not seeing a lot of folks do that well, but in general, it looks, the motion that I see the most commonly is outbound business development. Like it looks like outbound outreach through LinkedIn messages and emails, building relationships, being top of mind, but they all can work. We have agencies who do great on content. Like they just generate an enormous amount of content and create a lot of MQLs and then convert those. But that's what they do. They go all in and they spend a lot of time there. So anyways, I would say it's less about this choice and more about, does that choice align with your internal skill sets and interests? And are you committed to it? I don't know, Austin, any other?
I mean, when faced with these types of problems, it's like for us, it's always like kind of work backwards from, you have a revenue goal, you need to close a certain number of deals and you need to have a certain number of meetings and certain amount of outreach to get to those meetings, right? It's a simple math equation. But you can kind of see that I think based on this question, it's like we're seeing a lot of projects that aren't fitting what we ultimately want. We're not getting the right budget size or whatever, then you're probably marketing to the wrong audience, right?
Totally.
Like there is a group of people that fit that profile a little better. And like you said it exactly right. Like don't give up just because it's not currently like bearing the fruit that you want. It's about refinement. It's about trying new things. Like the marketing engine, getting that thing spun up takes a lot of time. Parallax, we've been in business for 4 or 5 years now, and it's something that has consistently evolved over that entire time into what it is today.
Yeah. So love it. That's great. So feel free to drop off. There's a couple, if you've got questions out there and you're waiting on an answer, let me hit a couple more super quickly. So one was just, hey, on our P&L, we have payroll costs under net profit equation. Sounds like you're saying you should be under the gross profit equation. And the answer is probably, which is service salaries. So any salaries that are contributing to delivering services, that's a cost of sale. And that would be removed from revenue to get to gross profit. And then below gross profit would be overhead salaries. So we often, like the sales and marketing team would be here. The administrative team would be here. Depending on the agency, sometimes the owners are here, sometimes they're not. Sometimes we split them. But generally speaking, like your main delivery folks, your designers, your developers, your copywriters, whatever that is, these people are in COGS. They are below, or they are within the gross margin equation. Okay. And then last question, Austin, I'll let you take this first. The KPI philosophy we talked about here seems to apply to the org as a whole. Do we recommend KPIs specifically for team members? Example, like within performance reviews.
Well, so for me, it's like it's very dependent on role, right? Like if I have my project managers, I'm obviously going to want to hold them accountable to specific, project health related things. I typically personally don't necessarily leverage utilization as one of those metrics for the broad team. I'm going to turn my attention more towards like, well, what is the thing I want them accountable to? It's quality work, right? Like it's good output. And that can be measured in all sorts of different ways. Every business is a little bit different, but like I want them focused on the things that they can actually influence and drive. And sometimes utilization isn't necessarily one of those things. Like if we're not selling, if we don't have enough work, how is that their fault? Like
totally. Often, yeah.
I
agree, by the way. I feel like that's kind of one of the most misguided, like holding somebody accountable to their billability. Like unless they're carrying a bag and a quota, I don't see how they're going to attribute that. The one thing I'll add to this, we actually talked about this in a webinar last week, which is like often when we are incentivizing employees, like here at Upsource, we ask the question for basically anybody, for your clients, are they making money? In other words, are we doing what we said we would deliver, right? In the agency context, it looks like, are we doing wonderful work? So are we doing what we, are they making money? Are we making money? So are we earning margin? So we're often holding folks accountable to the margin, the things they can control. And do they like us, right? So we have some form of a health score, an NPS, a CSAT, whatever. And so anyway, like a lot of times they ladder up to the organizational KPIs for sure. They shouldn't be mutually exclusive. But it's important to make sure they're focused on as you said, Austin, the levers they can control and not the things they can't. That's demotivating and not useful.
You should still measure it because you want to know.
Totally.
Like, it's
a good org. Yeah.
We have a couple of orgs that were like, they use it as like this person's always underutilized. And then they dig into it. It's like, oh, nobody likes working with them. It's like, oh, maybe we shouldn't have them here anymore. You know what I mean? Like, there's information in there that's useful, but it's not something they can control.
Okay, I think with that, we've hit all the Q&A. Thanks, everybody, for throwing those in. Thanks for joining, and we'll get in touch if we can be of any help. Have a good Wednesday.
Appreciate it.